Welcome to IG's early morning call. We're taking you through to the European market open in half an hour's time. It's Thursday, the 14th of December. Let's take a look at the headlines as pretty much every single market reacts to what happened late yesterday from the Federal Reserve. Let's take a look at the headlines as we wait what looks like to be a stronger start across the European markets. The Fed now indicating that the chances are certainly it's done with hikes. It's a question as to whether or not there's going to be an interest rate drop sometime next year. Markets now beginning to price this in all seriousness. And the Dow Industrials yesterday ended at an all-time high. Up next, it's all about central bank meetings on this side of the Atlantic world. The Bank of England, high noon today. The expectation of the markets yesterday, we could well see 100 basis points of cuts from the Bank of England next year. Unlikely to happen today, but the question is will the MPC stick to its higher for longer approach after the growth data that we saw yesterday saw a contraction for the most recent monthly month-on-month number coming through with a 0.3% contraction for UK GDP. And also, again, as we look towards the start of today's European session, we're mindful of what's happening with the euro because we've got the European Central Bank on its interest rate decision 45 minutes after the Bank of England, and the expectations are there now that because of the recent drop in inflation data across the eurozone, we could well see the chances of an interest rate cut coming through as well sometime next year from the European Central Bank. Will that be the indication for Christine Lagarde and her bank of policymakers as they make that decision today on eurozone interest rates? So that's how things look. Let's take a look at what's happening with volatility as we see this market continue to drain volatility out of the markets. We've got money going back into a large number of areas, not the dollar, but risk assets. And this is most notably in terms of some of the big moves that we've seen in what's going on some of the equity markets. Now, we often talk about the FTSE 100 being an internationally faced index. It's an index which has a lot of international based companies. These are companies that rely on external forces or rely on external markets greatly. And of course, there's quite often a currency risk. Now, we've seen the dollar drop yesterday. This has sent sterling up. The dollar declines yesterday have seen some of these dollar-denominated commodities, which are so prevalent in the UK markets, such as the base metals, the precious metals, the oils, and a lot of these big stocks are listed in the London markets. And as a result of that, we've seen the FTSE 100 push high yesterday and a continuation of the 24-hour market, 76.34, expecting a strong start today. Marabuzu candle, we went in at the bottom. We are currently trading at the top. There's no sellers in this market. We're trading at the highest levels on the FTSE not seen since the 18th of October. Just a quick little bit of a look at what we got in terms of where we are in terms of the record high that we've seen, this red dotted line with the highs back on the 16th of February 2023 last year, where we saw an 80.44 print. 76.32 is where we're standing there at the moment. German DAX up at record highs, continuing to push record highs on the markets today. Have we tipped over the 17,000 level? Not quite, but that is certainly going to be the next big round number to watch out for. 16,967.4 at the highs that we've seen on the DAX intraday on the session in the session so far today. And it's not just that. We've got gains in Spain, gains in Italy, gains in France as well. The French CAC 40, just to quickly update you on what's been happening there. Yesterday passing that red line, which is the previous high we had there back on the 21st of April this year. And 75.87, 76.11. So we're trading there at the moment. We're just off the highs, excuse me. But nonetheless, in the 24-hour markets, you can see yesterday closing without any sellers in the market, excuse me. And we've seen another buy up this morning as we see many get back into, as I say, these risk assets. Overnight in Asia, it's pretty much the same sort of picture. If you look at what's been happening across many of these markets, we do have a stronger Japanese yen there, which has given a slightly negative twist to the Nikkei 225, down 0.75%. When you see that move for the positivity for the Japanese yen, negativity for the US dollar against the yen, it does have a negative effect on some of these exporters. Japan's Nikkei 225 is full of exporters, and as a result of that, we've seen a little bit of money taken off the table there. But gains in Hong Kong, gains in the Australian markets, and we've seen many of what's been happening there generated by this rise in commodity prices, helping some of the big mining stocks. I'll take a look at in just a couple of minutes' time, like Rio Tinto and BHP Billiton. And that's where things are in the Asia-Pacific markets. US markets yesterday, 2 hours after the close, 2 hours after the decision by the US Central Bank to leave interest rates on hold, but indicate that there's a potential for downside next year. Dow Industrials up at an all-time record high, up 1.4%. Similar sort of percentage gains for all the major markets or major indices on Wall Street. Nasdaq up 1.38%. Let's take a look at the Dow, smashing through this previous line of resistance at 36,950. You can see yesterday's candle, absolutely whacking solid candle on the upside again, closing not too far off. In fact, we just saw a couple of ticks down from the all-time intraday record high. 24-hour market showing a red candle there at the moment. We don't really have much now between now and the end of the year in terms of money movement events. Certainly no big corporates due out. But when looking at these markets, it's mindful to watch out with what's happening with some of these stocks that's really been doing some of the big uplift that we've got. This is the Apple share price. Just wanted to show you this. Trading and closing at an all-time record high yesterday. Now, this is an extended trade. I'm not sure where it closed out the cash trading day yesterday, but certainly a lot of money going into these big stocks that have previously been some of the really big companies where we've seen some big numbers coming through. Microsoft, MSFT, the company trading on the Nasdaq and the Dow, up in yesterday's session as well. Not an all-time record high, but nonetheless not too far away from that, 37,552. You get the picture. A lot of these companies that have done a lot of the heavy lifting recently, continuing to see a lot of money going into them. So that's where things are in terms of some of those individually traded stocks as of the close last night. Just want to show you what's happened. The Nasdaq, not too far away from a record high. We closed, I think, very close to a cash trading high. This is the red dotted line showing the 24-hour market intraday record high. We saw back on the 22nd of November 2021 at 16,769. The markets at the moment trading not too far away from yesterday's close at 16,635. So the Dow, an all-time record high close, and we've got a continuation of the Dow at 24-hour market highs. And the S&P 500, just to complete the picture, you can see this red dotted line, the record high at 48.18. Intraday we saw there back on the 4th of January 2022, so not too far away from 24-month highs for the S&P 500. Again, like the Dow, like the S&P, a little bit of a down day, but to be frank with you, it's just a question of some of the unwinds of some of the stock trades that have been taken up to that high we saw yesterday. 47.21 is where we are there on the S&P 500. So it's on. Markets now fully expecting the Fed to cut interest rate next year. The green light certainly appears to have been switched on by the Fed. And 2024 certainly seems like the time when we could well see a reversal in some of these trends we've seen in some of the big central banks. It was certainly the case in the US yesterday, where the Fed signaled it could start cutting interest rates next year if inflation continues to fall. It told the markets that the strong growth, that while it appears to be moderating, the labour market's coming back into balance. We're seeing inflation making real progress, according to Jay Powell, telling reporters yesterday. These are the things we've been wanting to see, he said. Declaring victory would be premature. But of course, the question is, when will it become appropriate to begin dialing back into some of the record high interest rates that we've seen in the Fed? It's between 5.25% and 5.5%. Now, forecasts released by the Federal Reserve on Wednesday showed most policymakers expect lower key interest rates in 2024 after raising it to a 22-year high. So the Fed kept that target rate unchanged at between 5.25% and 5.5%. Now, Powell's comments rippled right the way throughout the markets. I want to begin, first of all, with taking a look at what's been happening with the dollar, because the dollar has risen to, has pulled back the dollar basket. Big declines yesterday, generating record highs on the Dow and gains across all of Wall Street yesterday. This is the effect on the currency markets, pulling back below the 200-day moving average, and indeed another spike lower today. Trading at one point intraday in today's session at a low not seen since the 11th of August this year. In amongst some of the other big market moves, just a quick update on where we are in terms of some of the big moves, including Japanese yen, stronger against that US dollar. The dollar pulling back to levels there at one point in today's intraday trade, not seen since the 28th of July. Now, this pullback in the US dollar has meant that we've got money going into a lot of the dollar-denominated commodities. Look at copper up above the 200-day moving average, a big spike up in the session in today's trade. It's not just copper, it's also other areas of the market. Zinc up over 1% as well. Aluminium another one where we've seen gains in today's session as a result of that pullback in the dollar. And what this pullback in the dollar is also doing, it's hoping, or traders are hoping, that this will indicate that there potentially has the possibility of seeing some extra demand coming through in the market as well. Also, watch out as well in the London markets for some of the big mining companies. This is BHP gaining on the session in today's trade, and the Australian market's up by a margin of almost 1%. It wasn't just that as well. It was things like Rio Tinto, another one where we've seen gains today. And at one point, Rio Tinto had closed this gap here that we had back on the 5th of August 2021 to levels there not seen since the beginning of August that year. So you can see that we've got a lot of money going into some of these base metals. And it doesn't stop there either, because if we look at what's happening with some of the precious metals, big gains as well yesterday for silver, and we're building on that in today's session after the highs that we've seen, that big pullback we've seen recently because of concerns about the fact it was overdone. But none of it. We've seen money continuing to go back into these markets. Spot gold, another one, up above the 2,000 level by some margin, 2030, as the markets bounce off this 76.4% retracement. And also watching what's happening with the price of oil. Again, going back to what we've had in terms of some of the moves on expectations that we've got potentially extra demand coming through. At one point yesterday, though, we saw a new 6-month low for the price of oil. This also coincided as well with the EIA crude oil inventory yesterday, talking about the fact that they've got this market which is seeing some of the extra supplies being eaten up in the market. But oil on those, not too far away from those recent lows, but nonetheless oil benefiting from this swing lower in the US dollar on the back of that Fed interest rate decision. So now let's wind the clock forward, because interest rates, central banks still very much on the slate. Bank of England, high noon today, where we're expecting the policymakers to keep interest rates at 5.25%. But will the MPC stick to its higher for longer approach? This was, until recently, what many believed, considering persistently high UK inflation, but it now all seems to be a bit more uncertain after yesterday's gross data. The UK economy unexpectedly shrank by a margin of 0.3% in October. We've been looking at a flat number month on month. There's been contraction across all main sectors of the economy. The UK's dominant services sector was the biggest driver of the fall in output, with declines in IT, legal firms and film production. These are compounded by widespread declines in manufacturing and construction after poor weather led to a drop in activity. Now, what's been happening here on the markets is this push higher for sterling because of that drop in the US dollar. In today's session, we're now not too far away from where we closed at yesterday's trade at 126.21. Now, what does the Bank of England do? Does it bow to pressure from politicians especially, but also from other areas of the market where we're seeing some pain for manufacturers, for service sector, for a lot of the employment areas? And does it look to start to begin more moderate language and saying we're going to start looking at cutting interest rates? Now, what's it do in the face of a weaker US dollar? Sterling against the US dollar, as I said, not too far from where it left yesterday. But I think the other trade we've got to watch out for is what's happening with sterling against the euro. Because obviously this is where the other area of activity is. This is going to be another interesting cross to watch out for. Sterling in today's session trading at 115.94. And 45 minutes after the Bank of England decision, the European Central Bank comes out with its own interest rate picture. It's widely expected, like the Bank of England is expected to say, that whilst it's going to keep interest rates on hold, it is going to look potentially at cutting interest rates sometime next year. The drop in consumer inflation to 2.4% across the eurozone has raised hopes that there could well be an earlier interest rate cut, although no change expected today. The main refi rates forecast to remain at 4.5%, the facility rate expected to stay at 4%, and a 4.75% print on the marginal lending rate again is expected to remain in place. Up to recently, European Central Bank officials have been consistently stressing not to consider a rate cut before the second half of 2024. But is there change in the air? Now, Isabel Schnabel, in charge of market operations at the ECB, highlighted in the recent Reuters interview that eurozone inflation has declined faster in October and November. As a result, she said she does not rule out a rate cut in the first half of 2024, stressing the European Central Bank should remain open to reacting to incoming economic data. Let's take a look at where the main area of activity could well happen. We've already seen we've got the German DAX at a record high. Let's take a look at the euro-dollar trade. Up recently because of that weaker US dollar. It's now in the hands of where we go in terms of the euro trade, 108.86. If we see a continuation of expectations that the European Central Bank could well act fast to cut interest rates in order not to damage the growth too far across the eurozone, we could well see some of the gains we've seen for the euro against the US dollar unwound in the session in today's trade. Doesn't stop there either in terms of the economy, because we've seen some economic data out of New Zealand. Wouldn't normally cover this unless it was something which is extreme, and indeed this is extreme. We've now got a contraction in the Kiwi economy for the third quarter. Official data out said in New Zealand that gross domestic product contracted by a margin of 0.3% in the September quarter, well below forecast for 0.2% rise. Annual GDP decreasing 0.6%. Market had expected an increase of 0.5%. So you can see we were expecting an expansion, and what we got was a contraction. Now, because of a little quirk in the markets, we've seen the Kiwi rise on the traded markets. This is against the US dollar. We've got the dollar down across the board, so it's not unexpected that we see the Kiwi push high. In fact, the Kiwi in today's trade against the US dollar, intraday trading at levels not seen since the 27th of July. And there's been a pullback nonetheless since then on this economic data in New Zealand. But in fact, it's not just against the US dollar that we've seen a rise for the Kiwi. Look at this as well. This is the Kiwi against sterling. In today's trade, we've got a piercing of this line of resistance of 49.32, albeit it's now been lost again. But that took us back to levels not seen since May this year for the Kiwi against sterling. Quick update on where we are in terms of the Kiwi against the Australian dollar. Down as one might expect, second day in a row. The downward revisions were made to economic growth, as well as this data out in New Zealand today. Second quarter growth was revised to 0.5%, down from the 0.9% reported initially. And so the market is now priced out any chance of another interest rate hike from the Federal Reserve, from the Reserve Bank of New Zealand, and flagging near a certain rate cut by July. So that's the situation in terms of where we are in the New Zealand economy. Let's move on to what's happening close by in Australia, because we've seen some employment data out there today, which is coming far stronger than had been expected for a second November. The jobless rate rising to a 1.5-year high. The jobless rate coming in at 3.9%, the highest reading since May last year. Participation rate in the markets climbing to a record high of 67.2%. That means that there's a record high employment in the Australian economy, where you work in what the population is and how much of a proportion of that is now in work of some type. Not necessarily full-time, not necessarily just temporary. It could also be any of those free contract days where you get the contracts that are supplied by the likes of Amazon and so forth, where you get people just turning up for work and getting paid for what they're doing. But it is worth looking at what's happening for the Australian dollar, which has kicked higher for a second day in a row. If you look at this trade here, you can see it's now up beyond this prior line of resistance at 66.88 cents. We're now there trading at highest levels for the Aussie against the US dollar, not seen since the 1st of August this year. So that's another area of interest on the foreign exchange markets. Quick update on where we are in terms of what we got later on today in the States. Retail sales expected to fall by 0.1% in the US in November month on month. Initial jobless claims and weekly numbers out 220,000 is what's been penciled in there by economists. And business inventories forecast to stay flat in October month on month. Now, let's move on to take a look at the corporate news headlines. There's just one company I wanted to follow up on. It's Currys. It's stuck to its annual guidance after reporting a first half loss in line with last year. The British electricals retailer, which is coming up to one of the most important periods in the calendar for the business, posting an adjusted loss before tax of 16 million. Group revenue falling 4% to 4.16 billion. Currys have got a number of problems. First of all, is that it's big on bricks and mortar. That's high expense compared to online. And people go into shops, look at what they like, and then go and order online, possibly from AO, the likes of some of the competitors who are only operate an online offering. But Currys does have its own digital offering. So looking at that, it certainly seems like this is an area of growth. But look at the share price chart. I mean, this just tells the entire story, doesn't it, from where we are. Let's take that high we had there, what was that, back in December 2015, and work out where we are now and where we're going to open. This has seen a loss of 90.74%. And that's not even taking us through to where the lows are today. Let me just quickly work out what's happening here now. 45.3 pence is where that stock is going to open this morning. Personally, I don't really like the look and shape of what we've got in terms of these numbers out today. And if we do get another loss in the stock, my worry is that we're going to get a new record low for this stock. We saw that record low, what was that, back at 43.3 pence back in October this year. And that certainly looks vulnerable to me on from these numbers. I didn't say there was just one company. In fact, there's two companies I think were worth looking at. And that is if we throw the clock forward to what's happening in the States later on today, because late last night we saw some numbers out from Adobe. Shares there dropping 6% in extended trade after the software maker posted a lighter than expected forecast for 2024. So often the case that these companies, when they come through with numbers, that what happens is the businesses find it tough in terms of their outlook. The numbers themselves, not too bad. Earnings at $4.27 per share adjusted, looking at $4.13 expected, so that was better than expected. Revenue up 12% to just over $5 billion, not too far away from where the markets have been looking. But if you look at what's happened with the chart, now this is not all sessions on the IG platform, so you've got to add in a 6% loss on this. Adobe called for fiscal 2024 earnings per share of $17.60 to $18 on $21.3 billion in revenues. Analysts polled by the London Stock Exchange Group had expected $18 in adjusted earnings. And so this is below those expectations. And that's why we've seen that drop in Adobe stock late last night. That's it. We'll be about 10 minutes away from the start of today's European session, looking for gains across the board on the back of that Fed news. Now it's all about what's happened. The Bank of England and the European Central Bank later on today at their interest rate offerings. Do watch out for Currys at the start of the day. We'll see a new all-time record low. Before the Bank of England, we get our own version of what's happening on the markets at 10:30. Charting the markets with Sean Mirris from our South African newsroom.